Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire, and my guest today is Hector Amendola, president of Panorama Mortgage Group. Hector, it's so great to have you on the show.
Good to be here, Diego. I've listened and seen your podcast many times, so I'm happy to be here.
We're going to have a great conversation. So kicking off, tell us more about Panorama Mortgage Group.
Panorama Mortgage Group was founded in 2007. Our co-founders, Jason Madiedo, Valerie Madiedo, are still very much involved with the company. We were primarily, for the most of our history, we've been primarily a retail shop. And so, out there doing the distributed retail thing in the communities, helping people. Our focus has always been to serve the underserved. Our mission has always been to build wealth through home ownership. That's our tagline here. And for most of our history, we've been known as Alterra Home Loans. And so some of the listeners might not know Panorama, but they might know Alterra Home Loans. And so Alterra Home Loans today is what we call our retail division. And so for most of our history, we've been Alterra. About, I don't know, maybe 3 years ago after the pandemic and all that, we kind of changed course a little bit, where we decided we were going to start focusing more on building a really, really solid foundation. So as a lot of people had to do in 2022, we had to level set and kind of look at everything and see who are we and where are we going forward. And what we did is we have our offices here in this sleepy little town of Las Vegas, but what we also did is we opened an office in Mexico, in Guadalajara, and we have about 80 employees out there. And so right now we say our corporate offices are in Las Vegas and in Mexico, in Guadalajara. And so that's been the foundation that we've been building over the last few years, as we've gone from being strictly retail to growing more on the TPO side, specifically with wholesale.
And we'll talk more about wholesale in a little bit, but can you tell me more about that team that's in Mexico? Is that mostly back office?
Yeah, it's entirely back office, actually. It started off as something that one of our founders thought be a good idea to help supplement some of our branches with some help in Mexico, right? So let's teach them how to be loan officer assistants, and drive the cost down, which was a big concern for us at the time, with costs going up in the branch network. And what it turned into in 2022 was us doubling down our efforts over there and saying, wait a minute, we have a pretty cool opportunity here to build a more back office stuff. So we started with our accounting department, our post-closing departments, and some of the stuff that we can do over there that we thought, we can manage them from here, but we can have a focus over there. And because it's Guadalajara, it's a 2.5-hour flight for me. So, and for a lot of our managers too. And so, the fact that we can go over there, spend some time with them, sit down, train, be in our conference room and work together was a really good deal for us.
Another question on this Mexican team, or this team in Mexico. Why not the Philippines or India or some of the other offshore locations that other mortgage companies have picked for that kind of work?
Well, I think that the honest answer to that is the co-founder who had this idea was Mexican. But I would say that what we've seen is there's a lot of advantages with having the folks in Mexico. The first one is right now they're only 1 hour ahead of me on the time. So it is 9:09 here, it's 10:09 over there. And so the fact that they're in either mountain or central time zones is a big deal to us, because when we're done here talking, I might call, one of our finance guys and say, let's go over some numbers, or our accounting department to see, what's going on there, or post-closing, why hasn't this loan sold or whatever. They're here, they're working. So I think for the most part, I've never worked with folks in the Philippines or in India, but my guess is that for the most part, they're working while we're sleeping, and vice versa. Or you might get a few that work in the evening time, and maybe they might approximate some of your hours, but the folks here are really working the same hours we're working, which is a big deal for us.
And that's really helpful for, loan officer assistant type work, where you've got to be in the flow and in the process and in the loan while the rest of the team is.
Yeah, it's really helpful for any collaborative work, if you think about it, right? So, again, it's a 2.5 hour flight for me. So sometimes I fly out there and all I do is meet with people and kind of just, collaborate, right? Work together with folks on some of the initiatives we have going and whatnot. And so again, the fact that we're on at the same time, it's a big deal for us.
Does your borrower base lean Latino in any way?
Yeah, yeah. So as I mentioned earlier, we've always been focused on the underserved. Where I started my career was in Downey, California. I was a loan officer assistant, and the loan officer I worked for first was only dealing with Hispanic clients and only speaking Spanish, which at the time, my Spanish is okay, but it wasn't great. It got really good over time just because I was dealing with a lot of consumers and talking to people, and I had to kind of really really get good at the Spanish. But yeah, it's always been in that realm. We kind of always lean in that direction.
I love that. So your career in mortgage spans over 2 decades, and you've gone from LO assistant to president of your company. What's been the secret to your success?
Oh, there's no secret. It's hard work. But I would say there's a couple of things. First and foremost, I had really good mentors in my career. And I think that's such a big deal. As most of us, I think at some point we deal with some level of imposter syndrome. And we're thinking, why me? Why am I here? What am I doing here? I think that over time, over the years, I've dealt with that more than one time. And I think, having good mentors that are kind of sitting there and they're telling you, sometimes reminding you, no, you can do this. You're actually pretty good at this. That's a big, big deal for me. Also, keeping me humble, right? Making sure that I stay in my place and I don't get, too high or too low at any point in time. So that's a big deal. The second part, I think, oftentimes I think about the journey I've been on, and it's a lot of manifestation, if I'm being honest with you, Diego. As a loan officer assistant, I looked around and said, I want to be a loan officer. That sounds like the logical next step. And so nothing was going to stop me. I was going to do that. Eventually, I want to run my branch and I want to be in management. And, when I'm running retail, I'm like, I think I want to run a company one day and then set my sights towards this is the direction that I want to go in. I've been fortunate enough, again, to be surrounded by folks that, kind of buy into some of the stuff that I'm selling on that and say, yeah, let's give it a go and let's try that out for you. And it's worked out pretty well for me so far.
Some folks in mortgage, a lot of folks in mortgage don't see that career path in front of them, whether it's the organization that they're at, their manager at the time, whatever it is. Sounds like you really saw that career path ahead of you at every step in the process.
I did. I'd be lying to you if I never had doubts. I got a story that I tell a lot of the new employees at the company. So if I get my chance, I'll tell them the story, which is that about 2 or 3 months in to my career in the mortgage industry, I remember standing outside my boss's office and I was going to resign. I said, this is not for me. I'm 22 years old at the time. Most of my friends are, in college, still living with their parents and kind of, enjoying lives. I'm taking files home at the end of the day and reviewing them and trying to figure out how to get them closed right and doing, things like that. And I'm thinking, why am I putting myself through this? I'm fortunate now to say I didn't have the courage to go through with it. I did not walk into my boss's office and quit. And I tell that story to people for 2 reasons. First is to let them know it's not going to be easy, especially in the beginning. There's going to be a steep learning curve and you kind of have to stick to it. But also to show them that, if you do stick to it, there could be a lot of success once you figure things out, which maybe it took me longer than most, but it was a struggle in the beginning.
You mentioned earlier in our conversation that you view the wholesale channel as a way to, diversify your organization and grow. You recently launched your wholesale division called Travisa Financial. Why are you personally bullish on the wholesale channel?
Bullish? We are bullish. I think a lot has to do with just the foundational work we've done over the last few years. We like to tell folks, at least internally, we tell ourselves that we're the best kept secret in the mortgage industry, which is not a compliment to us, by the way, because we don't want to be a secret, right? We want everybody to know what we're doing. But the foundational work and what we did in Mexico and what that did to drive our cost to manufacture down makes us feel like we're in a really good position to now grow and to build on top of that. Again, our focus has always been the retail channel. So we really do understand retail channel, like-minded folks, in all honesty, people that look like me. They're out there, they're in the communities, they're working with folks, and they're helping people get loans. And we feel like at Travisa, if we can stay true to that and just expand our reach by finding the same like-minded brokers out there that are doing the same type of business, and kind of say like, hey, we're kind of in the same boat here. We do the same things. Let's work together. Let's build some partnerships around that. We feel like that's a big deal. That's something that can really help us. That, and we've always been service-minded first, and so we feel like the service that we can give is something that we're not sure that many people can match it, at least not in our demographic and in the types of loans that we're doing. We feel like it's hard to match, and so those are the biggest drivers there for why we do feel bullish there. Again, driving that cost down, it really helps us with price, so we're really competitive with price, and so we feel like we have all the components there for some success.
So there are really only a few variables that you can compete on in the wholesale channel, which is a very competitive channel. You mentioned rate, there's tech, speed to close, your product set, and your client support, right? There's not a lot more than that you can differentiate on. How are you differentiating in the wholesale channel with Travisa Financial?
First and foremost, I think it's the product set that we have. So we do have a unique set of products that focuses on, as an example, an I-10 borrower, right? And so we do have some intriguing products that get into a lot of offices that maybe otherwise we might not be able to get into. That's the start, right? That's our foot in the door. That's how we get in. Beyond that, it's, again, the fact that we've been serving these same communities. We're looking for people that are serving the same communities that we've been serving, and we want to focus on that. And so, building relationships there, I think there's nothing more important in our industry than those relationships. And so we feel like, between our price, the communities we serve, the relationships we're building, and then, making sure that we have a product that get people's attention, it's a good mix for us.
I did some research about Travisa before this conversation, and you talk about your wholesale channel being a purpose-driven wholesale lender. What does that mean to you to be a purpose-driven wholesale lender?
Well, it's a lot of what we've always talked about, Diego. We've always been focused on serving the underserved and serving first-time home buyers. And frankly, we talk a lot about being here to serve the Black and Brown communities in the United States. We're unapologetic about describing it that way because we feel like it's something that a lot of companies, they might dabble in. They might hire somebody who's going to maybe pay attention to that demographic, but they're not just fully driven to serve that demographic, and we are. And so, a big part of what we say when we mean purpose-driven is that it's essentially, we serve the underserved, we serve first-time home buyers. We're focused not just on price, but when we were strictly retail, I remember in our old office, we used to have a sign on the wall that said, you get paid to find a yes. Within reason, of course, right? You can't always say yes, but, that's a mental shift that we ask all of our employees to make. It's really simple to say no to folks. You can find a reason to say no to the majority of the loans that we look at. But the reality is that, can they make their payment? Do they show the ability to repay? And can we figure out a way to get a yes and make a sellable loan, of course, through the process? And so that's our purpose. And so we're driven through that. We feel like if we put that client first, everything else is always going to fall into place. And so that's always been how we drive ourselves.
I love mission. I love values, but there's also a business opportunity in lending to the Black and Brown community. Talk a little bit about that business opportunity that you see.
Well, yeah, it's some people call it a niche thing. Again, it's our lives, so it's hard for us to call it a niche thing, right? Because it's what we do and what we've always done. But you're not wrong. There is a business opportunity. I think that there's an opportunity to serve and to really help folks that need the help, right? And I think that's the biggest driver for, at least for me, it's the biggest driver. It's not necessarily going and saying, well, look, and not that there's anything wrong with these loans, but that 740 FICO with 20% down payment and a bunch of reserves in the bank is a great loan, and we want those too. But there's something that's really fulfilling about helping that first-time home buyer buy their first house, and that opportunity that creates for us is to say, it's not just about numbers, it's about numbers and stories, right? And so that story that we're able to put together and then do it again, and suddenly that borrower is buying their second home, and maybe they're buying some investment properties, and you're helping them through that. And you see them go through that where, they first came in to our office saying, I don't know if I can buy a house. And now they're walking around with, 6, 7, 8 doors to their name. That's what drives us. And so, yeah, there's definitely an opportunity. And obviously we're in business because it is an opportunity. But I think it's the stories that really drive us.
Yeah. And you also look at the demographics, and Latino households are really the only demographic that's growing in the U.S. Significantly right now.
Which is insane to me, Diego, because, and I see the numbers. I've been a longstanding member of NAREP for a lot of years. And so, they release the State of Hispanic Home Ownership every year. So we get to see these numbers and look at them in a very a prideful way. And it's crazy to me just because where I grew up, it was way out of reach, right? The idea of home ownership was out of reach. And so to see that and to see the numbers that the Hispanic community seems to put out there is a pretty cool thing.
All right. So let's look at 2026. You've talked about your team in Mexico. We've talked about your wholesale channel, your approach to the wholesale channel with Travisa Financial. What does your overall 2026 growth strategy look like at Panorama?
Well, it looks much like 2025. What we did again at the end of 22 and 23 is we really took some lumps in setting up this foundation, right? And so, part of this growth that we're having now included shrinking quite a bit back then, right? Getting parting ways with some folks that maybe didn't fit what we were trying to do anymore, or didn't believe in what we were trying to do at the time, and saying, let's shrink to the size that we have to be so that we can, take 2 steps back so we can take, a bunch of steps forward. And so in 2025, what we've seen this year so far in our retail arm is pretty cool, because what we're seeing is some of our branch managers are saying, hey, I want to come back. I want to come back home. And, that speaks to our leadership in our retail division and some of the stuff that they're doing, but also speaks to some of the foundational work that we've been doing. And so continuing to grow that arm of our business, which has always been our bread and butter here at Panorama, is number one. But also, the launch of Travisa was a big move for us. What we see with that opportunity, again, is expanding into more markets. So the plan is to continue growing retail, to focus, a lot of attention on Travisa and our wholesale division, and to continue building our servicing book, which we've had good fortune that's grown quite a bit over the last couple of years, and just, continue driving that. And, that helps us create more leverage, and it gives us more opportunities in a lot of different ways.
As president of the company, what's your ideal balance for the origination mix between retail and wholesale?
We've always thought it should be in the 50-50 range. We want to make sure that we always stay true to who we are and, working in those communities, and we don't stray too far from that. But at the same time, we see the advantages of adding volume through this type of means. What it does overall, at the end of the day, it's going to help us drive our manufacturing costs down even more, and makes it a more attractive place for a lot of folks to come work at.
Do you currently have a geographic focus for the retail side and or the wholesale side?
It's not by design. It just kind of happened this way. It's funny. I used to run the retail division for our retail arm, which is Alterra Home Loans, and when I did, it was West Coast focused, probably because I'm in the West Coast, right? I was in California at first, and then out here in Nevada. The president of Alterra today lives in New Jersey, and so now you see it a lot more East Coast focused on at least from that end. We still have a lot of West Coast branches because we still have a presence out here, but their focus has kind of shifted a little bit more to the East Coast. Whereas on the Travisa side for wholesale, we've been focused more on the West. Our AEs are in the West, we're in the West, and we feel like, from a time zone perspective, this kind of works for us. Again, a couple of brokers have signed up from the East because they want to partake in some of our products, and maybe they have good relationships with our account executives, but it's not by design, but it's kind of turned out that it's a little bit East and West, but it's not like we're close to or not looking for opportunities on both sides.
Are you thinking at all about M&A as you look at your growth strategy for 26?
They come up sometimes. We do get opportunities sometimes. I wouldn't say it's a focus. I don't necessarily have a team out there looking for acquisitions or for mergers, but they do come up, and we'd be silly to not entertain ideas if there's good ideas. We actually have we feel like we have an attractive platform. Fit and culture is a big deal to us, of course. We have had some divisions that didn't work out just because the fit wasn't right, and we kind of thought, that we really want to make sure that we're growing with folks that fit our vision and fit what we're trying to do. But again, not necessarily a focus, but also not something that I would not entertain if opportunities came up.
Several big players in the wholesale channel use their presence in that channel and origination in that channel as a means to build their servicing book, and they want to grow their servicing book for a number of reasons. How do you think about servicing at Panorama across your retail and your wholesale divisions?
The thought of retaining servicing is always on our mind. One of our focuses over the last couple of years has been, let's build an asset. Let's make sure that we have an asset that, again, we can leverage in different ways, or, we can at times be opportunistic about, right? It's part of the business. So we do always focus on that. I would say that, we're on a retail side, we're probably retaining a small amount, maybe 10%. But on our TPO side, we retain a lot more. And, it's part of our mission too, right? We want to serve the underserved. That doesn't mean stop at closing and then forget about them, right? We want to make sure that we continue that. And especially if we're dealing with our demographic, we do have some folks in our office in Mexico. We think it's a perfect fit because guess what? They're speaking to our clients in Spanish oftentimes. And so there's a good fit there for them where they feel like, they're speaking to their own language. And so that's a big part of it too. So it is a big deal to us to build that. We feel like it's an important and a valuable asset. But at the end, and so there's a lot of focus on that.
Yeah, the last fall when rates dropped like they're dropping right now, we saw a number of the big servicers really ramp up in terms of originating from their book and recapturing or capturing some customers that were, the origination was with a different lender. Do you have any worry about, those MSRs that you do sell out, especially on the retail side, those getting captured by some of the big servicers?
Yeah, there's always a concern of that. You mean the book that if we were to sell part of our book, like that getting captured elsewhere? Yeah, I mean, a lot of the loans that are being originated by our loan officers, we want to try to keep, and we want to try to help our loan officers retain that customer for life, right? And so, once you do sell it, you're obviously you're inviting competition for those loan officers. But I do have a strong belief that if you stay true to who you are and you help the communities the way we're designed to do so, that still helps. Again, I mentioned earlier, our lower cost of manufacture, it drives our rates down, so we're pretty competitive. We've been focused on retaining our book. So when we did see some payoffs start coming through, say, okay, what are we going to do to keep these? And, we've been relatively successful. About 50% of the payoffs that we see come through, we're able to retain. I think it's a lot to do with our service, but also a lot to do with the fact that our price is pretty competitive there. So once we get a hold of them, it's not that hard to kind of go, you should stick around, and it's probably more important to us to make a deal even at less money than it is for our competitors when it comes to our book. So we've been relatively successful with that. It's one of the reasons why, while we're not necessarily talking about it like we do about Travisa, we did also launch a consumer direct channel last year for that very reason that you mentioned, because we wanted to make sure that we were ready and able to serve our customers if they want to make a move.
Okay, you've now mentioned cost to originate a couple of times, so I got to follow up. I imagine your team in Mexico is a significant part of some of the savings that you're seeing in your origination process. Have you also built technology to help with those costs?
So in 22 and 23, we pretty much ignored technology. We were not paying attention to it because it was actually, we were on the other side of it, right? So it was like many companies, we were in survival mode, and so we're trying to say, how do we cut costs? What else can we eliminate? What can we not, have to pay so that we can drive this cost down? And our focus became, let's grow in Mexico. Let's make sure that we build a strong foundation there. And so we looked at tech a little bit differently. Instead of what most lenders do is they look at it and say, well, you can save X amount by adding this tool. You instead of closing 2.5 loans per underwriter, you can close 3.5 loans or 4 loans per underwriter, and that's one of the driving forces with that. That sounds great in theory, but it's also implementation of that and some of those things take longer, and sometimes it just doesn't come to fruition. So we looked at it a little bit differently, and we started saying, what if we look at this and say, well, if we train a junior underwriter and attach that junior underwriter to the underwriter, we can still get them to 4 transactions a day. But it's in a more meaningful way, right? We're not necessarily throwing technology into it to try to solve it. Not to say that we're not paying attention to technology now. I was at the HousingWire AI conference last month, specifically because we're paying a lot of close attention to it now. We see where the industry is going. We see that if you don't become a major player in that, you're going to get left behind. And so now we're building a team for that, and we have our innovation department that we're starting to really pay more attention to and really focus on what can we do here to make sure that we don't get left behind. And now we want to mix the two and say, let's focus on our cost to manufacture through the nearshore stuff that we're doing in Mexico, but also through technology-driven initiatives.
Well, Hector, this has been a fascinating conversation. I've really enjoyed it. Thank you so much for joining me on Powerhouse today.
No, thanks for having me. And again, I'm a fan. I love what you guys are doing, and I'm happy to be here. Thank you for having me.
I love that.